Here we go. All right, welcome back to Market Watch. We're going to be talking about the overall macro as far as oil overhang and everything, as far as inflation goes, because the answer is always inflation. Like, if you have any financial question about what or whatever, the answer is always going to be inflation. All right, let's go over to crude oil futures here for a moment. So as you can see here, I've got some Fibonacci retracement lines on the crude oil futures chart. As you can see, I went from the lowest I could find to the highest I can find in this general uptick, right? From when things started happening, roughly about 10 days ago, right? Is when it spiked. And this area here is when the war sort of started on Monday. Boom. Right, so I kind of here. And now we're starting to get an overall pattern, right? So it moved up, broke through here, headed to here, broke down a bit. Next we broke through here, headed to here. So every time it breaks out, it seems to want to move two of these lines, basically, right? Came back down, broke out, moved to here, came down to here, and now we're kind of trading inside this kind of average 50 area, right? It tends to kind of level off between the highest and the lowest right there in the middle, and we're getting that now. So I think moving forward, we're going to start to see a more stable, oil price. Now it's high. I drove through town earlier today with Grandpa, and we noticed that the price of regular was $5.42, which is high, even for Hawaii. So we're going to keep an eye on these overall crude oil futures, and I want to see if I can find some overall correlation to the actual regular price of gas here in my community. But moving forward, we're going to start seeing a lot more energy costs and prices of energy across the board, from companies to our homes. We're going to start seeing that go up, because I don't think we're going to get a solution on the Strait of Hormuz problem. They've got mines there. Iran is not cooperating. Nobody's cooperating with each other. So we're kind of in a sideways trading thing in regards to war. Overall, the companies that you love, the companies that you have convictions in, aren't necessarily doing poorly because of themselves. Now, the markets are starting to recover. Today we got Fed talks and Fed meeting, and DJ Pow Pow definitely pumped his greatest hits as far as scaring you a little bit, but keeping you on the hook. Let's check the SPY. Here we go. Load. Okay, coming. Okay, here we go. So as you can see, the overall trend from back here in February tried to get over this 695 and then started to go on a downtrend. Now you can see throughout the day here, right, we're on the 17th, today the 17th, 18th. Yeah, all right, so this is the day basically here. So it didn't go well, but it doesn't look like it fell any more than it has been, as far as it's not more than average, right? It's less than this overall drop. So I think we're getting some consolidation, which means we're just starting to find some stability where the market's found a strong support area. Now, like I said earlier in the week on another pod, let's find it here. Did I just take it off? Doesn't matter. I'll back up this to a day. All right, here. And we can kind of see a better overall trend developing. Right, so it's this kind of curve would maybe make another cup and handle, right? Another tiny curve, and then pop in that direction. But since this curve is on the S&P 500, and this curve is definitely moving downwards, so I would imagine from here we would get a bump, sort of, right? Something like this, and then more dropping, right? And if we do break this, right? So we're going to test this area here. So we're going to get I'm going to draw you a line, right? So from here, boop, to here, right? Just kind of the overall last low area. So we got some time, and if it gets to here, it'll most likely bounce off it and then do probably back to here. Let's get another line going. So it'll probably go back to right about here if it does bounce off of this line. So we'll get a different color. Red. Okay. No, not you. Oh, no, you should be white. Okay. Here we go. Another one, and that one's going to be red. All right. So we're trying to kind of draw kind of a rudimentary shaped line, right? So it's like, okay, we're going to continue down to here, right? And then from there, we will go to possibly here, test that. And if it doesn't break through here, we're going to start to see here. That's the overall unfortunate design that might happen if we don't get any good de-escalation news. And if we do get down that through this, we break through this here, who knows, we might catch support, shoot, maybe here, yeah, right about where I drew the end of that line, I guess, right? And that would be the most unfortunate scenario for the market if you're not prepared, I guess. If you're short, please continue, I guess, because this trend is not going to correct anytime soon. And we're getting news that market correction might be coming sooner than we would like. And this would honestly be a decent time for market correction, because at least it's for a good reason, right? It's kind of a war. We got gas prices going up. This is a good reason why a correction would happen. And we've been expecting one for a long time. A lot of people, a lot of analysts, my mentors, they've all been talking about watch for a correction because we're due for one. And this might be the one we're looking at here, right? It could drop down to this kind of 630 area, which for the overall year is still good, right? So if we drop down and take, I don't know what is from 697 to 635. What was that, $60? That's exactly 10%. Wow. Okay, so markets tend to correct roughly about 10%. And if this was the start of that 10%, right here at this line would basically be that correction. So I would say, cautiously optimistic, we test this here and then we break out. But if we don't break out past this kind of last high, we're going to see this correction sometime soon. So you got to go with the flow of the river, everybody. This is not hope. My technical analysis is not the best in the world. I'm not a bear. Like, I want the markets to go up. Markets going up means we make money. Markets going down means we have opportunities to position for more money down the road, right? So I'm just trying to keep you aware that this is a possibility that we continue this trend, right? We get down some more. We might even, like, from here, test this line first and then come down to here and then go back up, right? With its usual candle situation, right? This is a trend line, and then come down. And then from here, this is where I would hope we catch the bottom of that correction, because it seems like exactly 10% from 7,000 roughly to that's like a third. That's a $30 difference. All right, 30 to 90, no, $60 difference. Yeah, that's exactly 10%. Perfect. So this would kind of be where I'd expect it. Let's put a box there, so I remember why I even drew this. Right. Okay, here we go. So I would imagine here ish. There. That's kind of where we're looking to find a support or a bottom, or really start hard DCA in there. Now, remember, I'm not your financial advisor. These are all just educational ideas, standpoints. I don't know your situation. I'm not here trying to tell you how to move your money. But for me, this is what I look at. Like, these are the indicators, these are the charts that I read and how I read them. Right? Because I'm not trying to defeat trends, right? Trend lines are there for a reason, especially when it's an overall, when it's a trend line on a large data set like the S&P 500 or the SPY. These are 500 of America's best companies. So it's if we see a downtrend, it means all of these companies, or a majority of them, are dealing with some sort of hardship, whether it's operating costs going up, whether there's a war happening. Wars don't make anything easier for anybody, right? Look throughout any history. Does a country do its best doing a war? Sometimes, if they've industrialized, like America has a couple times, where they pivot from making cars to making airplanes, right? This is World War. I'm talking. This is a completely different situation than we're in now. This is more of a extended conflict over a small area. But the unfortunate thing is, Iran kind of has a 300 Spartan situation. They've got a choke point, and any choke point can be protected with far less people than is required to protect a large line, right? So force people to a bottleneck, and then you can fight more or less indefinitely, which we don't want, right? We want this to be settled and everybody come to the table and agree that we should come to some sort of terms so everybody grows. But if this doesn't change, we're going to start having to truly consider changing our overall position longer term. Not long term. Long term for me is like 6 months, right? If we're going to see more of a downtrend, I personally will start probably reallocating more towards energy, which is fine, because this year's theme is definitely diversification, and I personally feel that diversifying into energy is good. Now, how you do that is really up to you. What kind of energy you like is up to you. I chose liquid natural gas, like VG. We'll talk about them for a second. All right, so any energy sector is bound to take a tailwind from this overall conflict, right? So we will shrink this down to, this is this year, right? And the war conflict started somewhere in this range, right? So energy fears, small cap pop off, right? And then we're still up here at 14, right? So I bought shares somewhere down here in this area, somewhere in here. Took some of those profits and rolled them into my first set of leaps, and those leaps are also doing well because I bought them for $15 way down in the future, right? So we're in good shape here in the short term, and we're also in good shape in the long term, because liquid natural gas or any kind of energy exposure is good long term. And I believe right now that energy is definitely going to be what's needed, either equally, conjunctively, or directly after AI build-outs need for more energy. So if you're investing in energy right now, you're sort of investing in AI as well, because these places in the world need massive amount of energy for their communities' data centers. The other one we're going to look at real fast, that's catching a pump. That I recently discovered yesterday is actually Next Decade. Now, I read people, like I said, multiple times, because it's faster. Because I know that if I see how the people move and how the people position themselves and how well they do in their trading, I don't necessarily have to do as much research. I can be like, okay, I know what a lie looks like. I know what a truth looks like on a person's face. And when it's genuine, that they look at something and they're like intrigued, but they're trying to find something wrong with it and they can't, this is that situation. So I bought a starter pack of Next Decade shares. Next Door, shit, I don't even know it because I've been in this position like less than 24 hours. Somewhere about here about here, right here at the top, during the podcast, and then poof, today nothing but rip. So much so that I got 15% in a day, and I was already getting dodgy about it because that's a lot of movement in a day. I personally love protecting my profits, so I already put out a covered call on this on my position just because it's a volatile stock. It's a volatile time. The VIX is high. I can't guarantee it stays. Like, I mean, I put the covered calls out for $8. So even if it gets to $8, that's like a 30% move in a short amount of time. And we're 15% there. So I'm happy to sell off these shares in less than a month for 30% profit, right? We're traders. We're trying to make an income here. And that's my best shot. Right, so if it breaks through here, I get my premium from the covered calls, plus I sell it for a price I would have sold it in a short term anyway. Right, like long term, I can see getting it to up here, right? Maybe, because it would retrace back to its previous highs up here in the 11 range. Fine, right? That would be double, maybe one more box right here, right? I could see it being at this $8.89 range. What, in May? Right? So like if we were to just kind of copy this box. Boop. Oh, cool, it's green. That's fine. Yeah, it's the rough same size. Okay, and then move this. Oh, bananas. You ruined it. Okay, so note to self. Lock your stuff. Okay, here we go. Lock the fib. All right, I just want to move this one. All right. So if you're just kind of like at another amount of feasible movement, like this is the kind of range of movement it collected at, right? It comes in here, collects a little bit more, poof, comes in here, collects a little bit more. So I can see for a little while if it maintains the same amount of price action that it's had, it'll probably trade within this $7.45 to $6 range, right? Because it just made a huge candle in a day. Things don't just trade up. Like, fine, if it goes up here, okay, cool, I was wrong. I get called away $8. I still made profit and premium. So essentially, I'm actually selling it for, what did I get the calls at? Like $1.43 a call. Probably out here, I think is what I'm, $1.25, I think. So I'm essentially selling it for $9, even if it gets called away at 8. Right? That's the game. Right? You have a target, you have a willingness to sell it, and you have ways to make that money work for you. Right, so this is my sort of overall price target. Right, if it gets to here, happy to sell it at $8, because it'll probably retrace right back into this range, and I'll keep buying it on the way up. Because I mean, it has had some violent days, right? You can see it has had some times where it's like, okay, bye bye, poof, right? So it's a volatile stock. It's a small cap, so we got to play it like a small cap. We got to be nimble about it. This isn't a Microsoft where it's like stupidly cheap to buy right now. I saw that yesterday on the pod too, and Microsoft just looks like super delicious right now too. Here, we'll take a quick peek. Now I'm not in Microsoft. I have enough tech personally. We hold IBM and Intel, like a sizable amount of shares of both of those. So I'm not looking for any more. more tech. Because, I mean, even with all my Robinhood shares, it's just tech, right? So I'm diversifying into energy because we need that to power all the tech anyway. All right, here's Microsoft. All right, we're going to back this up. Give me a bigger like a week. There we go, that looks good. Because Microsoft is better to look at more of a, what is happening? Hold on a sec. Oh, here we go. It didn't load. Oh, okay, that's what's happening. Got it. All right, so that round trip, right? So we're going to just, now I'm doing a little bit of copy technical analysis for Jason at Paper Trades, but as I was watching, I noticed that, yeah, he was more or less correct, right? I mean, even if you just threw the average through this range here, that it broke this range and couldn't, came back up, couldn't make it, came back up, tested it, left, came back up, right? So you're looking at a decent sized opportunity here. No, you, right? So if you took the high, took the low, like we did on the other one, and we just kind of gave it, right? Will it retrace? Yeah, we're looking at somewhere in this range here in the short term, and that's right at its kind of support area, huh? We'll take a zoom in. Right about here, it seems. That's good. I like that. So you got a decent sized opportunity here to kind of recorrect back to the means of right about 474. Now, if it breaks down past here, you might want to wait to buy about here, maybe 320. So if you're going to do any like cash secured puts, probably here in this kind of range. Like anything lower than this, you'll never actually get those shares. You'll just be making premium. So I guess if you want to just make premium and not get assigned, a 300 shot on Microsoft is probably a good idea. Now, I'm not your advisor, huh? Remember that. I'm just out here trying to educate you on how I look at charts and how I learn from others. Right? Like I learn quickly because it's important to adapt. And what I'm learning is that don't negate these strong trend lines. Right? It tried multiple times to break that trend line. So you got a pretty decent chance that it will not break this trend line unless the overall macro is just absolutely god awful. And even if it does break this trend line, you still have an opportunity right about here to pick up a decent size allocation. So maybe you start dollar cost averaging, maybe if you're looking into getting more into this, and then maybe about here, right? I mean, I guess I could do some calls or something, or some puts. I don't know. I have enough tech. I don't feel like getting into this, but this is a really nice chart and an opportunity out there for people who are looking to allocate into strong long-term tech. Basically, Microsoft has been around how long, and it's survived how many things, right? You can kind of see right here. You got the 2020 tested this, left, right? 2021 couldn't do it, broke it, left. Right, so those are the sort of things you want to look for when you're looking for a stock before you purchase anything. Like your positions should all be researched and back tested. And I'm just back testing this position that I saw yesterday, and it would be good for a lot of people if you're not exposed to tech. This might be a good opportunity. They tend to beat everybody. They tend to do better than most of the Mag 7 a lot of the time. Why not? All right, let's go back to crude. Oh, let's talk about the VIX for a second since I see it. Now the VIX closed today at 2509, which is not god awful. Let's hide some of these. Right about that's the high. Here's the low, right? And we can do that same thing again here. Oy vey. Right, low, high, check. Right, so we have a chance of it coming back down to here, right? Seems to be a good support area for the VIX, 21. overall, when everything calms down a lot, we get back to this 13 area. But it seems we're probably not going to leave 20 anytime soon. So expect a decent amount of volatility in the market and in your positions, which leaves you some strategic opportunities to watch and find a nice dip that touches your support line or your trend line, or 150-day moving average is another great indicator that I like to use. It seems to be more accurate than the 200-day moving average. I can't tell you why. It just seems to be better for me. So all of my it's all set to 150 days. All right, here's crude. Right, my crude oil futures. Yeah, okay, perfect. I'm gonna drop it back down to the day. Here we go. All right, cool. Let me check. I mean, I doubt it, but I'm gonna check anyway, just in case there are some people in the chat. But I'm relatively obscure, so I don't imagine so. But hope springs eternal, but it's not an investment strategy. Okay. All right, let's zoom in here. Back to, here we go. All right. Okay. While this loads, we'll continue talking about the overall oil crisis. I'm going to check anyway, just in case there are some people in the chat. But I'm relatively obscure, so I don't imagine so. All right. Double take there on that. All right, cool. So I don't expect the oil to come down anytime soon, is the overall theme of this video. The market itself is primed for a overall fall, right? It's just itching for a correction here. So as we close this, I want to leave you with a be patient and a be aware. Convictions are built during the harder times in your portfolio, right? So back to this stick drawing I made. Okay, don't auto scale right now, please. Okay, there we go. I'm going to shrink you. Okay, as you can see, this trend line is just not pretty, y'all. Like, it's just itching for this here. So as I finish here, keep your eyes on this area here. As always, stay safe, farewell, ahoy ho, and I will talk to you soon.